All right, welcome back, Failsafe investors. Welcome back, Failsafe family. If this is your first time to Failsafe Wealth, welcome to the channel where we talk about pretty much wealth building and the fail-safe route to build wealth. So we pretty much going to cover everything from like stocks. We're going to eventually get into real estate and pretty much financial advice and all this good stuff. Now, I do want to mention I am not a financial advisor. You know, this is for entertainment and hopefully you learn something from it, but I don't want to hold you up. So let's get right into it. So this is another edition of Battle of the Brands where I pretty much do a simple, fundamental, and slightly technical stock analysis of a stock that I might be looking at or might be considering. Sometimes you can put stocks on a wait list and just watch them and see how they do, and if they go down to an attractive price, you know, you can buy. But this is just to know what the stock is doing and what the company is doing, and if the company or the stock is overvalued, fairly valued, or undervalued, because that is what matters. You want to buy stocks when they're undervalued. So today I have a special stock. I mean, every stock is special in its own way, but I have a special stock for you, and the name of that stock is, let's go. All right, sorry to make you wait, but today we're gonna look into Johnson & Johnson. Yes, I'm pretty sure you've heard of Johnson & Johnson. Now, a lot of these companies don't have to be popular because that's not really what it's about. Like, popularity doesn't matter. This company just has to be making a pretty much a good profit, something that translates into dividends, because that's what it's all about. You know, you want to make money. You want to make money for just having the stock. So that's really what it's all about. So Johnson & Johnson was started around 1886, about 130 something years old. Very, very old. So that is a good thing, but not for every company. I've had companies, or I should say I've had companies that I have evaluated and were old, probably if not older than that, and pretty much had a bad balance sheet, bad income statement, was doing terrible personally. Like, I wouldn't invest in them at all. But we're not here to talk about those companies. We're here to talk about Johnson & Johnson. And I want to give you my opinion on Johnson & Johnson. So you know how we do this. We're going to use the same template we always use. I'm going to give you the basic metrics. Then I'm going to give you the fundamentals of the company, pretty much how this company makes money, like what are their core products and all that stuff. Then the financial statements, and then my opinion, and you know, that's how it goes. Starting off with basic metrics for Johnson & Johnson. Okay, so Johnson & Johnson, ticker symbol J&J, that's pretty simple, right? Selling for around $151 per share currently today in October 2020, and has a market cap of $397 billion. So this is a mega cap company, very large, very huge. Has a earnings per share of about $5.69 per share, so that's almost $6 in that. Like I've mentioned before in previous videos, $6 per share is good for any company, because most of these companies have millions of shares, and for them to make $6 per share, that is great. And they have a price to earnings ratio of about 26. Now, that is slightly high for me personally as an investor, but that's not bad, especially for a company of this size. And they also pay a dividend yield of 2.68%. So they do pay a dividend. So that is great. So if you have about $10,000 invested into this company, you can get a dividend around like $268 a year. I mean, you know, it's something, right? You know, but yeah, this is how we're going to look at this company. So Johnson & Johnson, pretty simple company, been around for a very long time. In my personal opinion, I would say that this is probably the biggest company that you can invest in the health sector, because they have so many products. They're well diversified. So Johnson & Johnson have products that you can buy in grocery stores, CVS, Walgreens, Walmart, pretty much Kroger, your local grocery store, wherever you go. Johnson & Johnson has their products in almost any store you walk into in America and outside of America. So they have shampoos, they have Band-Aids, they have skin products, they have baby powder. Now they are going through a lawsuit for the talc used in their baby powder. So I think it was like causing cancer or something like that. Now that has nothing to do with me, but I mean, something like that could hurt a company. But Johnson & Johnson is so large, they'll probably settle. Now, I'm not saying it's right or wrong. We're not debating ethics or morals. We're just looking at the company and seeing how this company will weather the economy that we're in and project it forward, seeing how they will perform in the future. So yes, they have a lawsuit out for their baby powder products. I'm pretty sure that this isn't Johnson & Johnson's first lawsuit, but like I said, they have products ranging from everything in skincare, skin products, and all that stuff in grocery stores, but they also make medical devices, orthopedic devices, surgery devices, all that stuff, and they also create vaccines, and they're pretty much in the medical field. They touch every level of the medical field. So they have, like, you know, medications, things like that. So Johnson & Johnson is big, right? Like big, like a company that big operating on that many levels, you would definitely assume that they're making some good money, right? I mean, they would have to be. For everything that Johnson & Johnson does, I do want to point out before we go into the financial statements that Johnson & Johnson makes about, or made in 2019, I should say, you know, $80 billion. Now, this company is worth almost $400 billion. So that right there would say this evaluation is a little rich, but they make about $6 per share. They pay a dividend, but the dividend payout ratio is like 73%. So that is high, but that's not as high as most companies like oil companies and things like that. So I would say that this company is stable. And before I give you my opinion on if it's overvalued, fairly valued, or undervalued, we will look into the financial statements and then I'll give you my opinion. But just right now, based off of the revenue that it generates, the metrics like the PE ratio, you know, the price over the earnings and all that stuff, I would say off the top of my head, just looking at the metrics off of a snapshot, this company is overvalued, like slightly overvalued. I wouldn't pay $151 for this company, even though it's a mega cap company. It would be a blue chip stock, which is come with some, you know, privileges. It is in the Dow Jones and it also is in the S&P 500. So they also receive investments from being in those indexes also. But I would still say paying $151 directly just for this company, like just to solely own individually this stock, $151, yeah, that's a little too much for me. I mean, and it's not about how much I'm willing to pay, it's just that evaluation is a little high. So if they bring, either they bring the earnings up or they bring the price down. Now, if they bring the earnings up to around like $7, $8 per share, then $151 per share, yes. But at the prices at now, no, I'd say the price will have to come down to like 120, 110 for me to even consider like, okay, I can get in on this, because now we're cooking with some grease. So let's get into the financial statements and then I'll give you my opinion on this company. Is it a win or is it a pass? You know how we usually do when we look at the financial statements. I start with the balance sheet, then the income statement, then the cash flow statements, and look at the free cash flow that's left over after capital expenditure. So starting with the balance sheet, Johnson & Johnson made $80 billion in revenue in 2019. In 2019, they had $19 billion in cash sitting on hand and about $45 billion in total current assets. Now, remember, with that total current assets, that $19 billion in cash is in that $45 billion. It's not $45 billion plus 19. So they have $45 billion in total current assets, which means that is money that they can liquidate within the next 12 months or pretty much tomorrow if they wanted to. That's pretty much the total current assets. And $19 billion of that is already in cash or short-term investments. Now, $45 billion in total current assets is pretty good, but it always depends on what is the total current liabilities, meaning all of your debt that is due within the next 12 months. So Johnson & Johnson has about $35 billion in total current liabilities. Now, I would love for this company to have double the current asset than the total liabilities, but a company this old, this profitable, they're pretty stable. I say in the sector that they're in, I don't see this being a problem for that company. They can always raise debt. Now, like I said, preferably I would see that 2-to-1 ratio. I'd rather see $2 worth of assets, total current assets, for $1 of total current liabilities. But it's not bad. It's not terrible. It's not the best though. Let's just be honest. So moving on to the total assets and the total liabilities, they have $157 billion in total assets, meaning if they were just to liquidate the whole entire company, they would have $157 billion worth of cash, and 98 or 95 billion, I think, was in total liabilities. Now, this is where you have to pay very, 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 very close attention to the balance sheet, because if you look at the intangible assets for Johnson & Johnson, and if you haven't been following my page, like I've said before, intangible assets is something that is not tangible. That's not something that you can grasp, or that would be like patents and things like that. So bonds and stocks are not intangible assets. Those are tangible assets. So if you look over the past 5 years, Johnson & Johnson from 2015 to 2019 went from $38 billion in cash in the total current assets to about $19 billion in cash in the total current assets. And at the same exact time that their cash was going down, their intangible assets was going up. So it's kind of like an accounting gymnastics. So the intangible assets in 2015 was around like 40 billion. And then from 2015 to 2019, they added $40 billion in intangible assets. Like now I haven't read the 10K or anything, and I would hope that they would at least describe where this money or these intangible assets came from, but that's kind of like some accounting gymnastics. So you gotta question those things when you see it. Like I would say that Coca-Cola has a more bigger brand than Johnson & Johnson. Like when you see Coca-Cola, you know that's the Coca-Cola brand. They have their own font, everything. Coca-Cola is Coca-Cola. Even sometimes when you want to like a lemonade, you say you want a Coke and it be a Coke product. And you say, oh, what product do you have? Let me get a Coke. What type of Coke? You know, things like that. But Coca-Cola has $26 billion in intangible assets. That is more realizable and understandable than $80 billion in assets that you can't really touch or fathom or grasp, and have someone evaluate and say, oh yeah, that's worth $80 billion. Now that's just my opinion. Like I said, just be very careful when you see these type of balance sheets where they're doing like this number just changes and drastically goes up just so it looks like their assets are growing year over year. So you have to look out for those type of things. Now, moving on to the income statement. Now, when we look at Johnson & Johnson's income statement, they made $80 billion, a little bit over $80 billion, like $82 billion in revenue and about $15 billion in net income. So that is good, but I have a small problem. When you look at the special items or non-recurrent items, meaning like these are things that are just like special cases that they spent money on in that year, and you shouldn't expect to see this on the next year's income statement. They spent about $4.5 billion on special items. And the year before that, in 2018, they spent $3 billion. So these are supposed to be non-recurrent items. Like, you're not supposed to keep seeing these on the income statement. Now, like I said, I did not go into the 10K of this company, so you get a little bit more detail when you read the 10K. I'm just reading like the statistics that they list, on Fidelity and Yahoo and other websites. Now, if you have read the 10K of Johnson & Johnson, or if you own Johnson & Johnson and you've done a fundamental analysis of Johnson & Johnson, then leave it in the comment section down below. If I'm missing something, if you can tell me what those special items were, I would definitely appreciate it. I would like to know. And if you also tell me what the $80 billion in intangible assets are, I would really appreciate that. Now, I don't think I'm going to look too deep into Johnson & Johnson just because the metrics at a glance just looks too rich for me. I'm just going to be honest with you. But we can't finish it there. We have one more financial statement, and I would say that this is just as important as the other two, the cash flow statement. We need to know where this money is going. So, like I always say with the cash flow statement, you want to get the free cash flow. What is the free cash flow? So, the free cash flow is when you take the net income and you subtract the capital expenditures, which is money that is used to grow the business, and then usually whatever you have left over from that, that's where you get the free cash flow, which is money that the company still have left over and they can bring into the next year, on the books, sort of a surplus, if you might think about it like that. So looking at Johnson & Johnson's cash flow statement, they spent about $3.4 billion on capital expenditures, so that's nice, that's pretty nice. And when I said they had $15.1 billion in net income, when you subtract that 3.4 from that 15.1, you're left with $11.7 billion in free cash flow. Now that is good. That's actually pretty great for any company. But my opinion on this company, I'd say is overvalued, and I don't trust the accounting or the management. That's just my opinion. I could be wrong. I mean, I'm also trying to learn while, I go about this myself. So if there's something that I missed, please leave it in the comment section down below. Hit the like button if you like this video, if you want to see more videos like this. I'm always open to suggestions. Hit the dislike video if you hate it. If you didn't like the video, if you didn't like my afro, the shirt, whatever, hit the dislike button. But there are more videos coming, so in a couple days you will see the company I will be putting up against Johnson & Johnson, and then at the end of the week, you'll have the true battle of the brands, where I'll put those two companies up against each other and see who comes out on top. Now, I will be doing more videos. I will be adding segments to my channel, so watch out for those. Also, I'm going to add a segment called basic stock knowledge and strategies, the mindsets going into investment. I'll divulge my own investment strategy. I've mentioned it a couple times, but I'm going to do an in-depth dive on it. Just be on the lookout, pretty much. It's that simple. So hit the subscribe button if you haven't subscribed to my channel, and welcome to the Fail Safe family. And until the next time, let's get it, let's do it.